Now, Duolingo little dingo. What's going on here with this stock, right? There's clearly an issue. When you got, like, it seems like every stock in the market going up and then Duolingo little dingo goes down 4%, I would be a little concerned about that. Anytime a stock's that weak when the market's that strong, I'd be like, what's going on here, okay? So here's an important factor that you got to take into account. As somebody who's been doing this for 17 years, how many people you know have been picking stocks for 17 freaking years? It's ridiculous, right? Listen, I watched a lot of companies grow and become big in a very niche space, okay? GoPro was a good example of this. GoPro was growing revenues, 230 million, then they grew to $52 million, $98 million, $1.39 billion of revenue, $1.62 billion, and then they peaked, right? And at this time, it was like, oh, everybody's gonna want an action camera. This market's just so huge. Everybody wants an action camera. Everybody wants an action camera, right? No different than the Duolingo little dingo thing. It's like, everybody wants to learn a language. No, they don't. No, they don't, okay? And so eventually you reach a saturation point, even in these niche markets, and you just have trouble growing your business anymore after that. Look at what happened on GoPro's annual revenues, right? Today, they do $800 million. It's not like the business disappeared. It didn't go bye-bye. It wasn't like they went bankrupt and they went out of business. No. It's a very small business. It's a very niche business, right? Fitbit, another great example. Like, look at the Fitbit users, monthly active users over time. They went from 6.7 million, 14.9 million, 23.6 million, 29 million, 33.8 million, 38.3 million, 40.2 million, 41.5 million. And Fitbit, that was a device that, people were making an argument back in these days when they had that insane growth. People were saying, like, everybody's going to have a Fitbit because it's, it tracks all your health, and like, why wouldn't you have a Fitbit? Every person on this planet's going to have a Fitbit eventually, right? And that was an argument that was being made. And when it had these insane growth rates, like, people believed it. Like, dang, yeah. They only have 15 million users. Everybody should have a Fitbit. They're going to go to 1 billion users or billions of users, right? And what do we know? Fitbit peaked. It peaked in a major way. Now, what happened to Fitbit's valuation? Well, back in the days when people were of the belief, like, everybody's going to have a Fitbit, or a huge amount of people are going to have a Fitbit, right? Fitbit's valuation was around $10 billion market cap on Fitbit's company, right? And fast forward a couple years later, $1.4 billion market cap. $1.4 billion market cap. Went from 10, stock fell 80+%. People are like, it peaked, right? It peaked. And it wasn't like actually users peaked at that particular time, because users actually kept going up for quite some years after that. But people were realizing, like, oh, this niche market is, it doesn't have much growth left. And that's when you get a major valuation, kind of re-rating in the stock, and it's brutal to go through that. Because the issue is you never come back. That's the thing, like, Fitbit never came back to that $10 billion plus valuation. If Fitbit was a public company today, a standalone public company, they ended up getting bought out by Google. But if they were a standalone company today, they might still be around, honestly. But what would their market cap be? $1, $2, $3 billion, something like that? It never would have gotten back to that $10 billion plus valuation it used to have back in the day, right? So that leads us to Duolingo little dingo here, okay? The stock's already been hit. The stock was at 500 something. We got the first initial scare, right? That sent the market cap down to where it is now in this $15 billion range. Here's the deal, okay? When we get the second scare with the stock, the valuation will fall, in my opinion, to $10 billion. And then when the third scare comes, $5 billion. That's my opinion. No, maybe I'm completely wrong. Maybe that never happens, right? Maybe it never gets scares. Duolingo dingo just grows to become a big dingo, and it just, everybody in the world wants to learn a language, and everybody in the world wants to learn chess, right? And by the way, from what I've heard, I've looked at a lot of reviews of Duolingo. It doesn't actually teach you very well how to actually learn a language. From the reviews I've looked at, people are like, it doesn't even, like, if you want to actually learn a language for real, don't do Duolingo, do something else, right? Now, in regards to this, I used to own a company named King Digital, right? King Digital was a game company. They made a fortune of money. Oh my gosh, did they make so much money. And they had all these very addictive, kind of like Duolingo little dingo, all these very addictive games, right? Which Duolingo is kind of more of a game than actually learning, right? And Candy Crush, Soda Saga, and all these other games they had. Oh my gosh, Paradise Bay, and they had a bunch of these different games that were so popular, and their user growth was just astronomical, right? And then like all companies, they started to reach a peak, right? And then they just started to slowly go down. They can never recover over time, right? And, you know, today, King Digital, it's owned by Activision Blizzard, which is now owned by Microsoft, right? And, like, it's still a money-making business. Like, you know, it's not like it went under. It's not like it disappeared. And it's the same exact thing I see happening with Duolingo here, is I don't think they're going to disappear. I don't think they're going to go bankrupt. I just think we're going to find out very shortly here that this company's in a peaking process in 2025, and it will never come back to these sorts of prices. Now, with my put options, I don't actually need that to come true. That's the best part, right? That's just a hedge for my portfolio. Like if the market gets hit at all, if Duolingo continues to get hit here, I make a bunch of money, I'm out my put options, cash those into long shares of other stocks, right? But I think the risk I'm telling you about here needs to be considered, because I see a lot of retail investors buying Duolingo stock heavily in 2025 this year, right? And I'm like, I'm just looking at the company, and I'm like, this has all the markings of being another one of these type of companies. Now, the argument I've already made in regards to kind of like Fitbit and GoPro is those companies sold hardware products, right? I already made this argument, and it kind of frustrated me because somebody tried to debate my point. And I'm like, I already made this point about like hardware companies are even extra hard because, you know, like software is just easier. Like Duolingo has all these people on subscription plans. It takes a lot longer for, you know, their revenue to falter and things like that. And so that's why I think Duolingo's in a better position than GoPro and Fitbit. But that doesn't mean their stock's not going to go down 50 or 70% over the next few years. So do keep that in mind, right? Now, here's the thing with Duolingo. And this should be, like, no one's talking about this on the bull side. And I think, like, this, you've got to take this extremely seriously. Their monthly active user number has started to decline. That's like in my opinion, that's the first signal of like, like this ship could be going down, okay? They went down to 128 million monthly active users. From the previous quarter, they were at 130 million monthly active users. That's the first sign, I believe, and I think this is also why the stock fell from the 500 range down to the 300 range now, of like, oh boy, I think this insane high valuation name is starting to peak here, right? And that's why people are already jumping ship on this one, because they realize the best days are likely behind little dingo here. But the sign number two that we just got, everybody should be freaking out about this. If you're long and you're just like acting like this doesn't exist, I can't see it, like this next part is even bigger in my opinion, okay? The social media guru of the company, the senior global social media manager, the one who really built this company into, like, why do they have all these users? It's because of this lady. This lady, right? Yeah, they got the product, but at the end of the day, the product's only going to do so much for you. You've got to go viral on Instagram, TikTok, all the social medias. And this lady did one of the best jobs in modern history for marketing of a company. Absolutely a historic job. And she's gone now, right? She posted this 5 days ago on her LinkedIn page. So I'm leaving Duolingo after 5 unforgettable years, 8 billion impressions, and even more jaw drops. It's time to take off the suit. Fresh out of college in 2020, I led Duolingo's evolution into a social-first brand, turning organic social into a growth engine that drove waves of new users. Yeah, we can't debate that. She drove waves of new users. Like, the reason this company is so massive is because of her. Duolingo Social helped catapult the company's market cap to nearly 7x in just 5 years by breaking into culture as an unexpected disruptor. It's been a privilege working alongside a phenomenal team that lifted me up and made the impossible feel routine. You all taught me how to fly and own my power every single day. As for what, why, who, when, and how, I'm saving all that for the book. I guess she's going to write a book someday, right? So yes, I'm no longer Zarya from Duolingo. I'll mourn that for a while. For now, I'm just Zarya. But then again, maybe there's nothing just about it. Adios, she says. Why would she leave? Why would this woman leave? You got to ask yourself that. I can only come up with one conclusion on why she would leave Duolingo. It's that she feels, this is my opinion, she feels like growth has peaked with the company. In that user numbers are going to be an absolute near impossible thing to have keep going up. I believe she thinks the user growth is peaked, and it doesn't matter what she does on Instagram, TikTok. She's not going to be able to, keep up these sorts of numbers. And she wants to get out while the company's on top. That's my belief. I could be completely wrong on that. But I have been paying attention to stocks for 17 years and watching all these executives leave companies, come back to companies, right? Get hired, get fired. I've been watching all this. And so, like a woman like that, I'm like, I don't see her leaving. In my opinion, if she really thought this company could grow to 200 million users, 300 million monthly active users, 400 million monthly active users, I don't think she would have left. I think she would have kept on the ship and been like, we're just going to keep pushing. And remember, she just departed, was it August 15th? That's not usually a rash decision. Usually you're going to plot that out over several months. If you're somebody like her that's a senior, manager of all the social media marketing and all the marketing for the company, you're not just going to wake up one day and be like, I'm out of here. No. That's going to be a calculated decision that you'd likely consider for a few months. My guess is she probably let the executive team know in July that she was likely going to end up departing, and then maybe she had a 2-week or maybe a longer than a 2-week thing, and then eventually she left, right? So my opinion is here, that woman probably sees that user growth is in a peaking process, and she doesn't want to. The last thing, she's got this insanely great reputation, right? Of she grew Duolingo to the moon. She grew it from such a small user base into this thing that had 130 million monthly active users. If they start going down on users, it's going to stain her reputation in a major way. If all of a sudden they go down to 120 million monthly actives, 110 million, 100 million, and she can't recover, that totally damages her brand. And that totally damages what she can do long term and the type of company she can work for. Now that she's going out on top, dude, this lady's going to be able to get a job anywhere. If you're Apple, how many millions do you want to pay her? If you're Meta, it doesn't matter who you are. If you're any brand in the world, you would pay this lady millions of dollars to come over to your company. Any startup, she's going to be one of the hottest commodities. Could you imagine her inbox? Could you imagine her inbox and how many great job offers she has right now? But you got to go out on top. If things are going to start to decline and you stay around on that sinking ship, then you're the one that looks like, oh, you got lucky, or whatever. So she's got to go out on top. So that's my opinion. And the longs are acting like they're not paying attention. It's, oh, no, it doesn't exist. And I'm like, dude, I think you should pay a little attention to this, okay? Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Now, in terms of what I sold out of completely here today, it was Little Dingo, Duolingo, okay? Duolingo, I decided to go ahead and cash it today. So, not bad. 37,000, let's call it right around $38,000 was my cost basis there. Ended up taking proceeds of over 57,000. That gives me a short-term gain of over $19,000, which isn't fun, right? I'll have to pay taxes on that. So we can say the actual gain on that might be, after taxes, 14,000 or so, right? Because I got to pay federal taxes, or maybe 13,000, maybe 12,000, let's say, somewhere around there, between 12 and 14,000. The good news is I live in Nevada, so we don't have state income tax here, right? The Strip pays for that. Thank you very much. And so, that just is what it is. Once again, cost of doing business. You want to make a lot of money in this world, you're going to pay a lot of taxes. Part of the process, baby, okay? It's a cost of doing business. So Duolingo, what happened here? Why did I decide to do it, right? I woke up today, Duolingo down again. So I'm looking at my Duolingo position. I have over a 46% gain. This is a position I bought last week. So I'm looking and I'm like, oh my gosh, I'm approaching a 50% gain on this position. And I just bought this last week. I'm like, this is looking pretty attractive. And remember, these puts expire March 20th, 2026, right? 260. So now, let's say I held these all the way to expiration. To make the same amount of money, I would need the stock come March 20th, 2026, right? To be, where would that be? $232, right? To make the same amount of money. That's a lot of downside from here. Now, that is very possible Duolingo goes down to 232 or maybe even below that. But do I want to take that risk, right? Now, that's what it comes down to in regards to the situation. So I said, peace out, I'm out. And I took my profit, right? Which, got filled at 28.54. So I made like, around 50% roughly on this, in literally like a week. It's incredible. Like, it's not always going to happen like that, right? But that is absolutely incredible. And so this was a rare opportunity. And for me to hedge my portfolio, I wasn't planning on cashing it this soon, but given the stock, how much downside that stock is just seeing time and time again, like it's not looking good. And so I'm like 50% in like a week. And that's where it comes with, you have to figure out more profits or greed, right? Because it's very possible Duolingo keeps going down. And I'm going to show you in a moment the case to be made that Duolingo keeps going down, right? And it's very possible that suddenly those put options could end up being worth, instead of $28.54 like I sold them today, they could end up being worth $35, $40, maybe even $50 within a few weeks or a few months from now, right? But I have to weigh, like, what if I'm wrong? That's always a situation. And you're under a time constraint with put options. With a long position, it's so much easier. I go long a stock, right? I make an investment, which is what I focus on 99% of the time. Make an investment into a company. It goes lower, whatever. I buy more shares. As long as I still love that company just as much, the fundamentals haven't changed. Put options is different. This is under a time constraint. If Duolingo, let's say, reverses this week, next week, and the next few weeks, and starts going up again, now I'm stuck in this position. I start losing my profits, right? Let's say Duolingo keeps going up. And maybe even I'm right on my thesis about Duolingo, but let's say the stock is just going wild again, right? It catches momentum. I don't know. They announce some good news and everybody gets hyped about Duolingo, little dingo again, and everybody's, oh my gosh. And everybody's talking about it on X and YouTube and everything. Oh my gosh. And suddenly Duolingo's $400. Then I'll have lost all my profits. I'll be down an immense amount, right? And I'm stuck in a situation then where I'm like, oh gosh, this hedge has really turned south. And then I'm kind of waiting. And then maybe it doesn't go down by March. And I'm like, I had a chance to take 50% in a week. I kind of got to take that, man. And so, that's where you have to weigh like greed versus more profits. No, there's a case to be made that Duolingo could keep dropping significantly from here. And I might have cashed way too early. And by the way, I'm perfectly fine with that. Like I'm never going to sell the top on a stock. I'm never going to sell the low on a stock. Like it's, impossible to get the perfect price, right? So if I did sell too early and suddenly those put options are worth $35, $40, in a week or two, it's all good. But here's the deal with Duolingo, okay? And here's a case to be made that it could keep going lower. What I pulled up in front of you right here, if I recall, this is a 3-month chart. I think it's either 3-month or 6-month chart. I think it's 3-month, okay? Now, what do you find? Duolingo's gone down almost 40% in the past 3 months, right? While the Qs are up 10%, the S&P 500 is up 9.6%, right? Imagine if the market got hit. Imagine if the Qs start getting hit, the S&P 500 starts getting hit, right? There starts to be some real weakness in the market, some real risk-off activity. Where do you think Duolingo is going in that situation? It's going with a 2 in front of it. If the Qs start falling, let's say NVIDIA comes out, and we'll talk about NVIDIA later in the video and if that's going to drop the market, but let's say hypothetically they come out, it drops the market, a lot less momentum, people get caught up into whatever Trump's saying again, right? Fear start around this or that. All of a sudden you get a little bit of fear cycle in there, right? Fear about maybe the Powell's not going to cut, or if he does cut, like it's going to raise rates or whatever, right? The 10-year is going to pop. Okay, all of a sudden fear comes in the market. You could see Duolingo with a 2 in front of it in no time, if that were to happen. And when I say no time, I'm talking within the next couple of weeks, right? And so then I'll be looking and I'm like, dang, should have probably held those a little bit longer, like could have made even more profit. But there's, once again, the case to be made that maybe eventually it reverses course. But this isn't looking good for Duolingo. Like, this stock cannot catch a break. Like, any pop this stock sees, it gets sold right off, right off. And that's been way before I even got into this hedge position, right? You can see every time the stock tries to recover, there's just sellers there to sell right away, which shows there's a big lack of confidence in this company. And there is a view that, the peak for this company is in 2025 when it comes to, stock price. And so, you don't get a stock this week, 40% roughly down in 3 months with the Qs up 10%. You don't get it that week without there being true, real fears of the fundamentals of this company deteriorating. That is an insane move down for a stock price in such a fast amount of time. With the stock market being that strong, I'm not the only one that's like worried about that company's fundamentals, right? Now this puts me at at available cash in the portfolio essentially at $156,000, right? I had margin buying power at $2 million, but you guys know I don't use margin because it's too risky, it's too much stress, it's too much everything. Interest you have to pay, it's a bunch of crap, okay? But I have $156,000 just chilling in the public account now at this point in time, which, guess what? This puts me in an amazing position. If we have, remember I've talked about this a lot of times this year reminds me a lot of 2018, right? A lot of 2018. I'm in such a great position if a 2018 scenario plays out, okay? In 2018, we had a melt up in the market that lasted all the way until the first week of October. And from there, down all the way to Chinatown. It was a meltdown in the market, okay? It got nasty really quickly. If that does play out, whether that's as severe as it was in 2018 or let's call it a mini 2018, I'm ready. I got the cash ready. $156,000 chilling in the public account. Let's say this doesn't happen. Let's say the market just continues to melt higher and higher and higher. NVIDIA earnings come out. They're great. A lot of excitement. AMD starts to move huge again to the upside, right? The semiconductor space, great feelings around tech. That's fine as well, right? Now, we could have both those situations play out. We could have a melt up all the way till October, right? We're only, late August? We're not even to Labor Day yet, because the Patreon sales on Labor Day, right? We could have a melt up, and then we could have a meltdown, right? And so whatever situation happens here, I'm looking great. Like, market melts up, I'll make so much money. Market melts down, I'm ready to buy. I got a whole lot of money ready to buy. So I really like the position I'm in at this point in time, right? No, I sold that Duolingo put options off, and I went in the pool. I had the pool heated. It was 87 degrees. It was gorgeous in there. I was just swimming by myself, and I was thinking about, man, that was nice. Made $19,000 in a week, right? But here's the thing you got to understand about this, because I know some of you guys see this, and you're like, dang, man, I want to live that life, man. That's the freaking life. Like, made $19,000 in a week, go in the pool, swimming around on a Monday afternoon. What a life. This has been 17 years in the making. 17 years in the making. If you think you're just going to wake up and be like, make $19,000 a week on some put options, it doesn't work like that. I've been doing this game 17 years. I've sacrificed more than you could ever imagine. The amount of parties I sacrificed when I was a teenager, when I was in my 20s, the amount of times I could have gone out, did this or that, the amount of experiences I said no to, the amount of people I said no to, that I invite me to this and invite me to that. No, because I'd make up whatever excuse, but really it was because I needed to listen to conference calls or I wanted to save the money to invest more or whatever, right? 17 years. So a lot of people think you're just going to wake up and you're just going to be making all this money and you're going to be swimming in your pool on a Monday afternoon, driving Ferraris, living in mansions, and it's just going to be the life. No. No. You have to sacrifice so much to get to that place. You have to even work on vacations. I mean, I can't, even when I go on vacation, if I go on an unplanned vacation, I'm going to be honest with you, I still secretly work. You have to sacrifice so much. I remember the days, even when I worked at Quick Trip, when I'd clock out and it was time for vacation. I was taking 3 days off, 5 days off, whatever, right? And it was like the best feeling. Like, I'm done. Like, I'm not thinking about work. I don't care about work. No one's going to bother me. I'm always thinking about work, like it's just different nowadays, right? So 17 years in the making, and the same thing with all these gains. Like you see me make thousands of percent on Tesla, thousands of percent on Palantir, thousands of percent on Elf, all these stocks I made hundreds of thousands of dollars on. 17 years in the making. It doesn't just like magically happen, right? And I create things like the Patreon and the private group to help accelerate you guys with your learning, because I had to learn all this stuff. Like I didn't have somebody to like hold my hand and be like, here's how to properly value a stock. Here's a great software for you to use. I didn't have somebody to help me with that. And I got these things to hopefully accelerate you guys. But it's 17 years in the making. All these gains, the public accounts performance, 17 years in the making. It didn't just magically happen, right? We've been able to grow the public account from, what was it? We started that portfolio, I think it was either 2017 or 2018. I think it was 2017, if I recall. I started that portfolio, right? Could have been 2018. One of those 2 years I started the public account, right? And now the portfolio is nearly $4 million. And it's like, wow, made so much money so quickly, right? 17 years in the making.